Hey everyone, I welcome you all on Heard with Priyank English YouTube channel. In this video, we are going to discuss another topic which is actually a very good topic to learn in the beginning when you are learning technical analysis, and that is volume bar. Whenever we start our journey to learn technical analysis or to study charts, the first thing we notice below the price, there are some bars, some red and green bars at the very bottom where you see the time. You see some bars are there, and you came to know very soon that this is volume. But there are many myths and misconception about this volume thing. And today I'm going to clear all of them and will help you understand what those volume bar means and how actually you can use them to make your trading and investing journey better. So let's go ahead and start the video. You just go and watch the disclaimer and I'll meet you with charts. So this is how you actually look at the charts for the first time when you open your chart in any broker, in any exchange, correct? I'm using Bitcoin dollar chart. However, all the concepts I'm going to tell you today in this video, they are similar to any of the market or any of the charts. It can be currency market, it can be crypto market, or it can be your regulated stock market or commodities market. So don't worry about that that I'm going to teach you on the Bitcoin chart. So that means that will work on only Bitcoin. So it's not like that. Okay, so let's go ahead and understand volume bars today. So whenever you open your chart, usually you see a chart like this, or maybe I have made the template for myself. So you may be watching a red or green chart on your trading view or on your broker. That's totally okay. You can change the settings. I've already made a video on trading view, how to change the settings, how to change the color, how to change the theme, or anything, any tool you want to use on the trading view. Just go ahead and watch my last video on this channel. So whenever you open a chart, you would usually notice there are some bars at this level at the very bottom of your chart. Here, let me go ahead and show you how they comes on your chart. If they are not on your chart, how you can actually apply them. So all you have to do is you need to go into the indicators here, and indicators need to go ahead and write volume, or you can just click this arrow and click on volume directly. I clicked on volume, and as you clicked on volume, you will see there are some red and green bars at the very bottom of your chart. Okay. What next? So you can go ahead and change the colors and settings by making double click on it or going into the settings. It's the same like any other indicator. You can make changes. Now, what happens next? Usually, when we start learning trading, most of the times we think that a green bar denotes buy and a red bar denotes that, because there is also something similar with the price. You will notice whenever there is a green candlestick, right? You can see one, two, three, four, five green candlesticks, or the bullish candlestick, or the up close candlestick, whatever you call it. You will notice there are green volume bars. Okay. But whenever there are red candlestick or black candlestick or bearish candlestick or down close candlestick, whatever or however you call it, so whenever there are red candlestick, there are red bars. For the black candlestick or the bearish candlestick, there is always a red bar. So we think that this shows you something about selling. But do you know this is only myth and you have been lied always? This red or green color actually means nothing, and it helps you nothing. Okay, let me tell you why and how. So first, you need to understand that this indicator is named as volume, where we think usually that this bar denotes the number of contracts are bought or the number of contracts are sold. Similarly, you would notice there is a number at the very right side in the scale, which always tells you that in the running candlestick. So running candlestick means the today's candlestick. So if we go ahead and check, so here is the running candlestick at this particular day, because I'm using the daily chart. If you're using an hourly chart, that means in that particular hour, okay, this number of contracts are being traded. So at this moment, you can see there are 4,590 contracts are being traded here. So you will see a value here. So if this is red, because this is red, or this is bearish, that may make you a misconception that this is about selling. Not. Okay. This volume indicator actually tells you the trading volume. Okay. Always remember it. And if you understand it better, you can use it better. Okay. So trade is actually consist of buy and sell both. It means that if I'm using a Bitcoin chart, if it says 4,590 contracts or Bitcoins are being traded, that means many people or one people has already bought this number of contracts. And because he has bought these number of contracts, there would be somebody to sell, right? Because trading is a zero sum game. Zero sum game means there are equal number of contracts to be bought or sold. So if somebody has sold 5,000 contracts, there should be somebody to buy those 5,000 contracts. If there is not a buyer, a seller can't sell. If there is not a seller, a buyer can't buy. Okay. So this value is the number of contracts traded. If you are in stock market, the number of stocks traded that day. If you are in futures trading, the number of contracts traded. If you are in options trading, the number of option contracts are traded. Clear? So come out of this misconception that this is about buying or selling. No, it's not. It's myth. It's all about the volume of number of trades. Clear? So what does it tell you now? So Priyank, when it's about the volume or the number of contracts being bought and sold together, then why there are red or green color? It's I don't know. Maybe just because it looks fancy? What could be the reason else? Okay, so can I change the color? Yes, you can. How do I use volume colors? Let me show you. I will go into the settings, I will go into the style, and I will make both the bars black. Yes, I will make the same color for both the candlesticks, and it still gives me the exact same value and it changes nothing. So stop using volume as a symbol of buying and selling. It's all about the traded volume. Now you can see still that contract value is 4.6. You will say, Priyank, it changed. It changed because it's live market going on and there are more 100 contracts might be bought and sold on that particular exchange. Also to note, it's the volume from that exchange. In cryptocurrencies, your broker and your exchange both can be same. Okay. And like data exchange, but in stock market or regulated market, usually your exchange is different from your broker. Like in Indian stock market, your exchange might be NSE, National Stock Exchange, Bombay Stock Exchange, okay? And your broker can be anyone, any broker which you use to punch the trade in your mobile application or your web platform. So for a particular stock, there could be different volumes in NSE or in BSE. In the similar manner, in cryptocurrencies, there might be different number of contracts being traded on an exchange. So if I'm using this particular chart of this exchange, there might be this number of contracts traded. When you will go into the Delta exchange, there might be different number of contracts being traded. So remember this. Clear? Now, let's come to the point. Now you understand this part. Now you understand that the color does not matter. It's the black thing. So how we are going to use it then if there is no color? I was using it very well. I was thinking that green candle was a buying thing. Red candle is a red bar means that there are sellers all around there. Now, Priyank, you have broken all my planning. Now what I'm going to do? So don't worry. I'm going to teach you how to use them in a better way. Let's see. So when you have come to know that these bars only tells you the number of trading volume, so you will notice there are different size of bars. Let's see. Here are small bars, here are bigger bars. What they tell? Simple. It tells you that in those particular days, the number of trading contracts or the volume was low. And in those days, the volume was high. And in this particular day, it was very high. It tells you this. So how it helps me? It helps you in so many manners. The first way is that it tells you because there are so many traders into the market or so many people are interested trading that particular script. That means that particular coin or script or chart or commodity or stock may go for high volatility. If you see very big or rising number of candlesticks, so many big candlestick, that means the volatility in that particular stock or coin is going to increase. So if you noticed that there are big bars over here in Bitcoin, you will notice after that price has been so much volatile. Let me show you how. Look at this. There is a big candlestick here, not candlestick, the volume bar here. And after that, you will notice the price has been very volatile. You will see long wicks. Look at this. Long wicks, very volatile, very strong momentum in the direction. Again, wicks, again moves up and down. This is called volatility. So whenever you will see big candlestick, that means that coin or stock is going to be volatile in coming days. So that could be a good place to start trading, or especially for short-term trading. Okay. So volume tells you that this particular stock, because there are, I think, 6,000 plus stocks in India markets to trade. There are thousands of altcoins to trade in crypto markets. There are several currency pairs in currency markets, commodities to trade. How would you know which is a good one to trade today? A big volume bar can tell you that this particular script is going to be volatile for coming days. Again, you will see the price was the volume bars were very small. You will notice that price started consolidating in a similar trend. However, the volatility is still same. I will not say that volatility has gone down, but in many cases, the volatility will go down as well. Okay. Everything is not 100% in trading. So remember that. But after that, you will again see that volume bars started rising. When volume bar started rising, you will notice all of a sudden price shifted its trend. When the last time volume bar rose, price shifted its trend. When the next time volume bars were high, price shifted its trend. And you can see that this time the volatility was way higher than this time. How do you differentiate this? Because when there are large number of participants in the market, so there would be many people booking their position, either entering into the position or booking into the position. They are more likely to be more volatile. But when there are volume bars not high as this, you will notice price is going into that direction. So most of the people made their position here and they are just holding it. They are not more likely trading it. That's why price is moving sharply and with a strong momentum. So that's how you differentiate the volatility part with the size of volume bars. But high rise volume bar can actually inform you that there might be a shift in the trend or the price direction. Now, if I notice, you might be thinking that this volume bar is actually very small to this. So how would I know that this is different than this one, right? This must be a question into your mind. Now, let's solve this. So there is a setting in the volume tool. When you will go into the settings, you will notice there is a button of the option of volume moving average. So what you can do, you can apply it onto the volume bars. So let's go ahead and click on it. I'm going to make it a bit thicker so that you can see it clearly. This blue color line is actually the moving average. Its value is set by default at 20. So that means 20 bars. You can change it as per your need if you want to, if you're using short-term trading. And if you see price is very much volatile, you want to use it like 9, 10, that is your choice. But I always use 20 and it seems good to me always. Okay. So now you need to compare the volume bar size with this moving average because it's a comparison. Look, if I ask you a question, tell me this line is a small or this line is long in the comment. If you know this is small one or the bigger one or the longer one, this is short or long, this small or big, right? So most of you would have answered it correctly. We don't know, right? Because unless we have a second line, we can't tell it is long, it is short. So if I draw a line like this, now we know this is a longer line, this is a bigger line, and this is a smaller line, correct? If I draw another okay. So if I draw another line like this, now we know this one is the shorter one. So it's a comparison. In the similar manner, these volume bars are actually comparison. So if you are comparing it with this, then you might be under the wrong impression. How can I do it in a better way? Is that it's very simple. You use this moving average and look at that common difference. See, when moving average was here, all of a sudden we saw a very high rise in the volume bar. But you would notice that the height above this moving average is almost the same, which is below the moving average. Like this particular area is almost similar to this area. So you can say the volume bar are almost 2x what they were average in the previous times. Okay. Now again, see the moving average is at this point and you will notice the volume bars were so small that this bar is actually almost the 2x of the previous bars. So if you will compare these bar with the moving average and the previous bars, you will notice this is actually has the similar impact like these bars did. I hope you understood this part. If you didn't, you can just go ahead and watch this particular last 2 minutes again. Okay. And you will understood it. So you can use this moving average to make it more relevant to you if this volume bar is actually high or not. That's how you can differentiate that if trend is going to be changed. So that's how most of the times when I have to use volume, I use it as the trading volume only. And always notice if the volume is rising, uh, which is actually not normal for that script, then it's a tradable pair or tradable stock or a tradable coin. That's how I mostly use it. But there are some people who also use it for the trend to identify if the trend is strong or trend is weak. So I'm going to teach you that way also. That will again depend on you if you want to use it that way or not, whatever the way, because things in trading are not rule of thumb. They are never 100%. You have to understand the uncertainty. You have to understand the probability. Okay. So whenever you see if any of the trend like price is going into the uptrend, okay, or price is going into the downtrend. If there is a trend into the price, if price is going higher, or it is going lower, the same time, if you focus on the volume and you see volume is rising like this in both the scenarios, if volume is rising with the price going higher or lower, that means that trend is actually strong. Why? Why it is strong? Because people are still interested in trading that particular coin or stock when price is going higher. It is going into the premium, it is becoming costly, but still people are ready to trade, ready to invest, entering and exiting the position. That means the volume is rising. So people are interested into this. That's why the trend looks strong. So what is the benefit of this? Now, should I buy here? No, I don't want to tell you to buy there. What I want to tell you here, see, if you know price is going higher, the trend is strong. How do you know? Because volume is going up, volume is rising. So you know that the trend is strong. So if you see any kind of reversal, what you will think? You will know because the volume has been in the rising condition, this trend goes strong. So more likely, this is going to be the correction. This is going to be the correction and price more likely to make a higher low and will start going up. That's how you can use it in a better way. However, people use it directly with this, but I prefer using this to understanding what price going to do the next. So if price is rising, volume is rising, it means trend is strong. In a similar manner, if price is dropping, volume is rising, that means trend is strong. Clear? So that tells you, will volume be rising here? And if it will be strong, why would I buy here? Right? Made the confusion? So let's clear it out. I told you if price is going up or price is going down and volume is rising, it means these are strong. So you have to think vice versa as well. If price is going up or price is going down, but volume is going down in both the scenarios, or it's not rising, that means that these trends are actually weak. What does it tell you? How you can utilize it? So if price is going up in a very strong manner, clear, but the volume is not rising, even it is declining, it means when price is going higher, people are no longer interested to buy or trade it more. So what price more likely to do? It is going to the correction. Now, because you know this trend was weak, that means this is more likely to be the reversal rather than a correction. That is going to help you this way. And because here we are checking the trend or the price with volume, that's why we call it volume divergence. Clear? So you can use volume divergence to understand the strength of trend. What is divergence? I already explained you in the first video I uploaded on this YouTube channel with the RSI. When price is making deviation with anything, with volume, with RSI, with MACD, or any indicator, then we call it divergence, and we can use it to understand if the trend is strong or weak. In the similar manner, we are using volume here to understand the divergence of price or the strength of trend. Okay, let me show you a few examples. So let's see where price was in a trend. volume was rising. So here, look at this. Look at this. Price went up. Price is in uptrend here, but you will notice that the volume is actually rising. Throughout this move, throughout this up move, you would notice that the volume was actually rising. You can even see it with the moving average as well. That means that this uptrend is actually strong. Clear? Then we saw very high-rise buildings in the volume bar, and then we see that this consolidation broke out and price started dropping. But because we knew that this was a strong trend, that means the next correction, the next drop, more likely to be a correction, not a reversal. And again, what happened? When this drop happened, volume started dropping. Do you notice it? What I told you. If price is dropping, or the trend is going on, but volume is declining, it is more likely to be fake because it is a weak trend. So this dropped the volume here. Then again, volume started rising and price started making highs and price went above this. So that means this trend was strong because volume was high. This trend was weak because volume was low. And this trend again started up, moving up because all these positions were into the trend already. So volume does not have to go up. It is just going sideways and price is going up. But again, if I start looking it from here, and if I start looking like this, from this price is going up, but volume is not rising, what does it tell you? We need to go ahead and comment below. I'm not going to tell you. If you want to know my updates on Bitcoin or cryptocurrencies, you have a link down there in description. Just go ahead, click on this and join my free Telegram channel and get the updates regularly. Similarly, if you are a stock enthusiast, I do have a Telegram channel free for stock updates. You can just click the link below in the description. All links are available in the description. Also remember, there are many people who are using my name, photo, and a lot of other my personal information and asking people money on the name of any service, any course, or any investment service. But remember, I don't have any of them. I am not charging anything. I will never DM you. I will never ask you money. But don't pay to anyone. If somebody asks you, taking my name, telling you that I am from Priyank's team, just block them and report them. If you are an Indian citizen, just go ahead and file a complaint against them in cybercrime or call 1930. All right. And if you are an NRI or watching it from another country, please be aware that I don't have any Forex service, I don't have any crypto service, or don't pay under my name. Okay. All links I have, my official links are available only in description and join it from there only. So that's how you can use the volume thing. All right. Volume thing with the trend and price. One last myth I'm going to explain now, and then we will end this video. All right. So one last myth is sometimes you might think when there is a big candlestick in price, volume bar becomes big. If there is a small candlestick, and the volume bars are usually small, but it's not like that. Let me show you and break this myth for you. So look at this. Let's see. So here we have, you see, this is the highest volume bar candlestick, right? And you will see this is for this particular candlestick. This is still big enough, right? This is still big enough, but I'll show you a bigger candle than this and that we can see here. Look at this. This is a bigger candlestick than this. Even look at this. This is a bigger candlestick than this, but the volume bar is very small. Okay. In a similar manner, you can notice there is another big volume bar here, right? This one, but you will notice the candlestick is very small for it. Okay. Also, there are many, like look at the left. Here you can see there is a big candlestick, but the volume bar is very small. Comparatively, it's behind me. Let me show you here. Look at this. This candlestick is the biggest one, but volume bar is not the biggest one. You can see many example like this. Okay. This candlestick very big, but the volume is not that much bigger. Here, so you will notice many times even a small candle like this may have a higher volume bar than this, respectively previous or future volume bars. So because this happens due to the number of volume, the number of stocks, number of coins or contracts being traded at a particular price. So if there is a big player wants to buy a very big position at a particular price and it gets successful, there is no need to be a big volume bar. There is no need to be a big candlestick for that volume bar. All right. So don't fall into the myths. Understand the volume, the definition of volume, the concept of volume, and how to use it properly so that you don't fall for the fake outs, or you don't stay with the false information, because that may affect your trading system. So start learning from good places. Of course, you can learn from Hold with Priyank. All everything is free on this YouTube channel as well. And start practicing it with an open mindset, and always be eager to learn new things. Never be egoistic, never be rigid that I know everything, and new things will come up and will help you shape your trading system in a better manner. With all these wishes, I end this video here. So I'll see you again in any of my next video. Till then, take care of your family and take care of yourself. Bye bye.